Hello everyone, welcome to second episode of my investing introduction videos. So I talked about how we should not focus on return only, but focus on how much risk we are taking in our investment portfolio and how we should focus on building a portfolio that is sustainable enough through thick and thin. And we should remember the larger the money gets, it is hard to cope with the volatility, even with the return rate that is not really impressive, such as like 7.5% per year. If you keep it enough consistently, it will make you gain a significant amount of money at the end. I have 4 portfolios right now, which I call all-weather diversification, and these are essentially asset allocation portfolio based on the all-weather concept. I also have a small portion of my money invested in these what I call alpha portfolio and momentum portfolio. So all-weather portfolio. So for stock, I carry 50% stock. I carry 27% of VTI, 10% of VEA, and 13% of IEMG. Bonds, I have long-term duration bond ETF called EDV, VCLT, and inflation protected long bond LTPZ, emerging market long duration bond EMLC. The main reason I chose PDVC is because this is K1 free, and for gold I buy IAU. So that leaves 10% of my portfolio that I put aside for momentum trading. So this one has more ETFs. So this alpha is 100% stock, mostly concentrated on ETF that focuses on the future industry, like robotics, self-driving, cybersecurity, lithium batteries, online shoppings, semiconductors, cloud computing. So you can just Google these tickers. I have it here. You can easily look it up, what kind of companies are included in the ETF, but basically all these are future industry heavy ETFs. The final portfolio that I have is called momentum, and basically the concept is that there's a momentum in stock market. Rising stocks tend to rise more and continue to rise. How I formulate this portfolio is I have ETFs that is included in my asset allocation portfolio, and I selected ETFs that represent different asset classes and sectors. So I put those in the Excel sheet and I monitor their 1, 3, 6 month return every month, and I use this formula. I multiply the 1 month return by 1.5, so 50% added weight, and I multiply 1 for 3 months and multiply 0.25 for 6 months return rate, so making it 75% reduced weight. This makes the total score. So I invest in top 10 for 1 month and then rebalance after reevaluating the total score every month. Legendary! So I started tracking my portfolio starting mid-April, April 17th to be exact. And my benchmark is VT, World Stock Market ETF. So my benchmark gained 7.83 along the span of this time. And my all-weather and diversification portfolios are right here. And my momentum portfolio is right here, actually lost value. My alpha portfolio, with the current correction during June, it actually fell below the total market index. So I don't know, it's only 2 months, so it's really early to evaluate how my portfolio is faring. What? Are you sure? But I plan to consistently track the performances of my portfolios, and I'm going to upload a video every quarter with the performance and any updates I have in my portfolios. In early October, I will upload a new video with the result on how my portfolio did over 3 months. Thank you very much.
좋아요, 구독해주세요.